For 200 years, the American locksmith trade protected the homes, the businesses, the offices, the institutions, and the personal property of working-class American families across every state. A working locksmith in 1970 earned more than the average teacher, the average insurance agent, and the average junior banker in his city. He was the man you called when you were locked out of your home, your car, your office, or your safe. The trade had survived 2 world wars: the Great Depression, the rise of factories, the suburbanization of America, and every economic shock of the 20th century without significant disruption. What it could not survive was 15 years of marketing decisions made by the largest technology companies in the world. Between 2005 and 2020, an industry that had supported nearly 70,000 American small businesses was reduced to a fraction of its former working size. The technology behind the change was real, but the marketing was the actual weapon that destroyed the trade across 1.5 working generations of American craftsmen. Welcome to Forgotten Trades Vault. Before we open this vault, hit subscribe so the next archive finds its way to you. The archive opens in 1868 in Stamford, Connecticut, the lock-making capital of the United States, at the moment when the modern American locksmith trade was born. In 1868, Stamford was already home to the Yale Lock Manufacturing Company. Linus Yale Junior had patented the modern pin tumbler lock 6 years earlier, in 1861, which became the foundation of nearly every lock used in American buildings. The pin tumbler design used a series of spring-loaded pins of varying lengths to control a rotating cylinder that only opened when the correct key was inserted into the. A correctly cut key lifted each pin to exactly the right height, allowing the cylinder to turn and the lock to open, with the design proving reliable and a half. The Yale patent created the foundation for nearly every lock used in American commercial and residential buildings for the next 150 years across every region. Yale built the factory in Stamford, and the working locksmiths of every American city built the businesses that installed and serviced what came out of it across the next century. By 1890, every major American city had between 50 and 200 working locksmith shops, with the trade growing alongside the explosion of American urban development. The post-Civil War decades drove enormous demand for locks of every kind, with new factories, commercial buildings, homes, and banks needing professional installation and service nationally. The Connecticut clusters of Stamford, New Haven, and Bridgeport supplied much of the lock hardware, while independent locksmiths in every American city installed and maintained the factory output. A working locksmith in 1890 operated from a small storefront on his town's main commercial street, surrounded by displays of locks, keys, safes, and specialty hardware. New York City alone supported more than 400 independent locksmiths by 1900, while Chicago, Philadelphia, Boston, and San Francisco each supported hundreds of shops. The locksmith trade was always a hybrid craft, combining mechanical engineering, security consulting, diagnostic detective work, and patient artisan skill in a single working profession at the local level. A working locksmith could pick a lock that had jammed, cut a key from a worn original, install a deadbolt in a new door. He could read a customer at the counter and know within 30 seconds whether the request was legitimate. That diagnostic judgment was as much a part of the trade as the mechanical skill. He kept records on every commercial customer in his territory, with the master pin sequences and key codes for buildings he had served for 30 years. The trade had its own apprenticeship traditions, its own technical literature, and its own professional associations across the American working trade economy by the early 20th century. The Associated Locksmiths of America, founded in 1956, became the primary credentialing body for the trade in the United States across the post-war decades of expansion. By the 1960s, the Associated Locksmiths certification was the standard credential that working professionals carried into commercial accounts at every level of the American economy. A certified locksmith could walk into any business in America with that credential in hand, and the customer knew he had passed independent technical examinations covering mechanical locks, automotive locks. The training pipeline was real and well established across the country, with three main paths into the trade for any motivated young person who wanted to enter the profession. The first path was family inheritance, where a son or daughter learned the trade from a parent who already ran a working shop. The second path was direct apprenticeship with an established working locksmith, paid from day one and lasting between 2 and 5 years. The third path was through vocational high school programs, where states with strong industrial training traditions offered locksmithing alongside other security trades for motivated graduating seniors. California, New York, Illinois, Texas, and Ohio together ran more than 300 high school locksmithing programs in 1965 at the peak of American vocational education funding. Each program ran for 2 or 3 years and taught a graduating senior the basic vocabulary and skills needed to enter a working apprenticeship at a local shop after graduation. Some of those programs were operated in partnership with local trade unions, which guaranteed apprenticeship placements for top graduates within the working trade economy of the time. By the federal census of 1970, the United States supported approximately 70,000 working locksmiths, with 90% operating as independent small businesses or sole proprietors. The trade was solidly middle class, with median annual incomes that exceeded the broader American median by 20 to 40% depending on city and specialty. A senior locksmith in a major city in 1970 earned between $12,000 and $20,000 a year. A locksmith with commercial accounts who serviced office buildings, hotels, retail stores, and industrial facilities often cleared more than double the American median household income on his trade. A senior locksmith with a strong commercial route could clear $30,000 to $40,000 annually in 1970 dollars, putting him in the top 15% of American earners. The American Society of Industrial Security and similar professional bodies maintained relationships between commercial locksmiths and the security directors of major American corporations across the country. A commercial locksmith with relationships at 20 office buildings could service rekeyings, master key system updates, and emergency calls across a steady weekly schedule for decades. The independent shop owner could expand his business by hiring journeyman locksmiths and dispatching them to commercial accounts, building small but stable mid-sized businesses across his career. He owned the shop, owned the truck, owned the inventory, and answered to no one above him in any organizational chart of any corporate hierarchy in any American industry. He took vacations when he wanted them and retired when he wanted to retire, often passing the business to a son, a daughter, or a younger apprentice. The work was honest, the customers were local, and the trade required no formal degree of any kind from any American institution to enter or to operate successfully across decades. A boy or girl who entered an apprenticeship at 16 could be working as a journeyman at 21 and running a successful independent shop by 30 with no debt. The trade had absorbed every major technological shift of the previous 100 years, from the electric lock to the automobile, without losing its core economic structure. The pattern held through 2 world wars, the Great Depression, the post-war suburbanization, and the rise of factory automation, with the trade continuing to grow across every disruption. Then came the slow and quiet shift, beginning with federal vocational education funding changes in the 1970s and accelerating into a coordinated marketing campaign across the 2000s. In 1976, and again in 1984, federal vocational education funding formulas were rewritten by Congress. By 1990, the number of American high schools offering locksmithing had fallen below 30 programs nationwide, down from more than 300 at the post-war peak. By 2000, the number had fallen below 10 programs, and the formal high school pipeline into the trade had effectively ended across the United States entirely. But the collapse of high school programs alone did not kill the trade. The Bureau of Labor Statistics still counted more than 30,000 active locksmiths in 2005, with the trade absorbing the loss of high school programs without collapsing entirely. The independent shops in every American city continued to take walk-in customers, train new apprentices, and serve commercial accounts as they had done for the previous century of operation. What changed between 2005 and 2020 was the technology, and more importantly, the coordinated marketing of the technology by the largest companies in the world. Beginning in the mid-2000s, large technology companies entered the consumer lock market in earnest, with billions of dollars in advertising and product development spending behind the entry. Schlage and Yale, the historical American lock manufacturers, were acquired by larger corporate parents, with Schlage becoming part of the Allegion conglomerate and Yale absorbed into Assa Abloy. New entrants like August, Nest, and a long list of venture capital-backed startups began producing electronic and connected locks for the residential market. Apple, Amazon, and Google each entered the smart home ecosystem with their own lock integration platforms, drawing the working locksmith further out of the customer relationship. The technology behind the new locks was real. The marketing was where the trade was killed, with the major technology companies investing billions of dollars convincing American consumers that mechanical locks were obsolete and unsafe. The marketing positioned electronic locks, smart locks, and connected security systems as the modern, intelligent, and inevitable replacement for the keyed deadbolt across every American household. The mechanical lock, the marketing implied, was a relic of an older and less sophisticated era of American life, despite the actual security data showing it was still highly effective. Consumers responded to the marketing pressure as they always do, and by 2015, the consumer smart lock market had grown to more than $1 billion in annual sales. By 2020, the smart lock market had exceeded $2.5 billion annually, driven by sustained marketing pressure and big box retail shelf space prioritization. Home Depot, Lowe's, and Menards dedicated more shelf space to electronic locks than to mechanical ones, completing the marketing capture of the residential customer base of the trade. The traditional working locksmith, who serviced and installed mechanical hardware for residential customers, watched his residential customer base shrink year by year across the 15-year window of decline. The commercial customers were affected differently, but no less severely, as building owners installed centralized electronic access control systems managed by software providers rather than by local locksmiths. The keys that the locksmith had cut and managed for 30 years were replaced by encrypted access cards and mobile phone applications, with the maintenance contracts transferred to technology vendors. By 2020, the Bureau of Labor Statistics counted approximately 17,500 active locksmiths and safe repairers in the United States. The trade had lost more than 40% of its working professionals in a single 15-year window, with the destruction concentrated in the residential service segment of the trade. Most of the shops that closed did not close because there was no demand for lock work. The customer ordered a smart lock from a major retailer and watched a video on how to install it himself. Who benefited from this rearrangement of the American lock and security market across the 15-year window of marketing dominance by the technology companies? The technology companies benefited, with billions of dollars in new product revenue from the smart lock market that they had themselves created through coordinated advertising campaigns. The big box retailers benefited, with high-margin sales of branded electronic hardware that they had stocked in place of the lower-margin mechanical locks of the previous decade. The software providers benefited, with monthly subscription fees that the old key-based system had never required from any customer at any price point in any market. The locksmith was not in the marketing campaign, and after 15 years of saturation advertising, the locksmith was not in the customer's mind either. The cost was paid by the small business owners who lost their livelihoods across 1.5 working generations of American craftsmen running independent shops across every state. The cost was also paid by every consumer who installed a smart lock that failed within 5 years and could not be repaired by anyone in their county. A well-made mechanical deadbolt installed by a competent locksmith in 1960 would still be functioning today, 65 years later, with periodic lubrication and basic maintenance. A smart lock purchased in 2015 and installed by the homeowner is now, in many cases, an electronic brick, with the battery failed, the firmware unsupported. The customer who saved $100 by skipping the locksmith in 2015 has now spent $300 replacing a failed smart lock with a new one that. The trade did not die. The trade was marketed out of existence by coordinated corporate spending that the working locksmith shop could never match. Now, open the archive on the present, because the trade is still operating in every American city, with the surviving shops now serving customer bases that extend across multiple counties. In May of 2024, the lowest 10% earned less than $32,000 a year, while the top 10% earned more than $72,000. Independent shop owners who report income through small business filings are not captured in those statistics, and their incomes are typically substantially higher than the broad category figures suggest. A senior locksmith with established commercial accounts, working out of a small independent shop, commonly earns between $80,000 and $150,000 a year on routine work. A single mid-sized office building can produce more than $10,000 a year in routine maintenance work. A specialist in commercial high security who installs and services Medeco, Mull T-Lock, and other restricted key systems regularly bills above $120,000 annually. A specialist in safe and vault work who services bank, jewelry store, and government installations can earn between $100,000 and $200,000 a year. A specialist in automotive locksmithing who handles transponder keys, electronic key fobs, and immobilizer systems for modern vehicles has become one of the highest-paid branches of the trade. The cost of replacing a key fob through an automotive dealer runs between $300 and $1,200 per vehicle. A mobile automotive locksmith in a major metropolitan area, available for emergency calls, can clear $200 an hour during peak demand windows across most working days. The work is recession-proof in a way most office work has never been. The pandemic of 2020 did not idle a single working American locksmith for long. A language model can describe how to pick a lock. The hand that reads the wear pattern of a key and identifies the manufacturer of a lock by sight is irreplaceable. The smart lock industry has actually generated new demand for the working locksmith. The path back into the trade is shorter than the path through any 4-year college program. The Foley-Belsaw Institute runs a long-standing distance training program for locksmiths, and the Lockmasters Security Institute in Kentucky runs intensive training for safe and vault specialization. A direct apprenticeship with a working shop, paid from day one, remains the most common path into the trade today. Within 3 to 5 years, a locksmith who specializes in commercial, automotive, or safe work routinely earns between $80,000 and $150,000 a year. The Yale factory in Stamford has been sold and resold several times since the 1980s. But the trade is not dead, and the trade was never the actual problem. The marketing was the problem, and every marketing decision can be reversed by the person standing at the door, picks in hand. If this vault opened something for you, leave a comment with the trade you wish your school had taught you instead of college prep. The next vault holds a trade that paid better than medicine in the United States for more than 2 centuries. The next vault opens soon.